Good afternoon, traders. This is Brad Matheny. Today is May 27th. We are looking at, this is the Bitcoin video from MENT.com. Last week, I started this new video, and I created a couple of custom little indexes that help us understand what's happening. It's very important for you to understand that in my opinion, Bitcoin and a lot of cryptos are going through an unwinding phase after this big, broad speculation right here. Let me turn this off so you can see it. So you can see the big speculation phase in Bitcoin over here. This is my expectation going forward. I went through that in last week's video. I believe that we are going to be moving into a downward cycle trend, as you can see across here, setting up a potential flagging formation off of this location, possibly off of this low here, moving downward. But I believe the unwinding that's taking place throughout the globe is going to go through a series of shifts. And I want you to understand that Bitcoin and crypto may see another fairly strong rally or two. It's just going to be a matter of shifting assets, moving into what appears to be undervalued technology. So understand that as capital is seeking out new opportunity, new growth, new undervalued assets, Bitcoin and cryptos may turn into something somewhat important. So now let's have a little fun with this, okay? I'm going to try to explain to you, and I think I went through this last time, how this big breakdown phase is likely. We've seen it come down. You can see here, it's very important really to understand this. Now we come down, we build a base, we had this breakdown low. We reach this new high, we come down, we build a base, we broke out of it, had this breakdown low, which ended very quickly. Here we come down, we build a base, we have this breakdown low, we rally back up here. It's more than likely going to be that we are going to build another base, and I'm going to move into here. And sorry to drag the chart around, I just want to get it positioned where I can show you where we are going to likely move down from these highs. Remember last week I indicated that we were in bearish trending mode. I think we're going to probably, and I'll get rid of this, and I'm going to just kind of flag this out a little bit, show you what's happening or what may happen. I'm going to use these Fibonacci levels from, let's see, 382, 151, 1.5. Okay, so here's our 1.5 level, here's our 2, and okay, so we have this area between roughly the 382 and the 1.5 area, which is going to be fairly important. I think we're going to probably grind our way down into this 382, 1.5 area, find some sort of a base, rally back up, roll down, and then maybe get some sort of a flush out. And when I say a flush out, it's probably likely that it's going to come down to this 20,000 area because of this previous support back over here. And then possibly immediately find some support and start to move higher, okay? And that would be a very strong indication of, and now what am I basing that on? I'm basing that on basically the historic support level that's been found here in some sort of a downward flagging formation where we have the breakout. So what I'm thinking is we're going to come down, we're going to form the base, kind of like this. Form the base, get the flagging formation, and understand that 1.5 level kind of comes right across here. I'll move it up a little bit. Kind of right in that area. Sets up our base, sets up our flagging. We get a little bit of a breakout like we had right over here. I'll carry this one out a little further. And then we get the breakdown, which is going to come down here and set up the ultimate low. So here we have the ultimate low. And now let's try to take a look at cycling from, let's take a look here, move this out of the way. And so let's take a look here. Cycle low, cycle low, cycle low, cycle low, cycle low. So we really want to pay attention to the big broad cycle lows. Let's see if anything lines up this way. And what I'm doing here, folks, is I am looking to see for any cyclical alignment. Seeing if we get any cycle type patterns here. 4, 5, 8, 6. We don't really, we get a little bit of alignment. Okay, let me turn this back on, show you guys a little trick. It's not really a trick, but it helps me understand if this works. Okay, it's not letting me into the settings. Let me see if I can reload this. Reload the page. Okay. Now let me see if it'll let me do it. Yay, okay. So what we're going to do is we are going to turn off the display. Perfect. And we are going to set the standard deviation. Let's try 25. Okay, that's a little bit better. What we're looking for here are broader market pivots, okay? And so in this regard, the way, a lot of times what I use with regard to broader market pivots, and I'm going to explain this to you very simply, is that I will look at, for example, we're in a downswing right now, you can see, and we come back here and look at the last downswing. What I'm going to try to do here is pick the midpoint of the last downswing, the last confirmed downward pivot. I'm going to draw a line across that area because the midpoint of the belt line in that area becomes very critical. Secondarily, we have another one here. So try to pick the midpoint here. Carry it across. And what I'm going to do with these midpoints, folks, is I'm going to set them up as a different color. Something very unique, hopefully. We got blues, we got all types of other colors, so I will set them up as dashed. That's fine. I will set them as dashed. We'll set them just uniquely as dashed. And then I'm going to set another one across the midpoint of this area. Okay, so we've mapped out the last major, what are called belt line wave formations, okay? Now, what we're going to do, you can see we've got another one here, a downward cycle one here, and a downward cycle one here. Just for the heck of it, I will draw this midpoint level. Try to get as close as I can to the midpoint, carry it out. And then I'll carry this one here as an intermediate, because this is really going to align. When they crisscross like this, I call it a sandwich pattern. You see it here, and you see it up here. What ends up happening is you pick the midpoint of this one, pick the midpoint of this one, pick the midpoint of this one, average it out, and turn around and say, okay, this becomes our critical resistance level. And I'll do the same thing here. Up, down, then we get the big uptrend. So if I look here to here, across back this one, I would say this becomes roughly a major pivot level. And when I come across here, midpoint, 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 I would say roughly this becomes a major pivot level. Try to get the midpoint. Now, do we have any other of those types of crisscrosses? So these would all become major pivot levels. This one being so close to this middle point here plays a fairly important role. Now we would do the same thing hypothetically for bullish triggers. So what we would do is we would come in here, we'd find the midpoint of the previous bullish trigger, which is here, carry this across, make it green, oops, dark green. Here's the midpoint of a trigger here, a wave cycle. And again, what I'm doing here is this goes back to Japanese candlestick theory. We're looking for what's called the belt line level. And then we have a bullish wave here, a bullish wave here. So we could come in and say that we want to average the two bullish waves. That would put us approximately right here on top of the same line. And then we have bullish wave here, bullish wave here, bullish wave here. And I would say that we have a midpoint roughly right here, which co-aligns with that previous level. And then we have the midpoint right here, which co-aligns with this area. So now what I've done by doing this is I've highlighted very critical support and resistance areas that we can measure. These are what are called a belt line, so you can consider them Fibonacci belt line theory. Belt line is a Japanese candlestick term which translates as the easiest way to explain it is the center of gravity for price. So the belt line in Japanese candlestick terms refers to sumo wrestlers and their outfit. In sumo wrestling, if you can get a hold of the belt line, the little belt that goes around the waist, it's very little if you ever seen a sumo wrestler. If you can get a hold of that and control it, then you have control over your opponent as far as moving him out of the ring. So in Japanese candlestick theory, belt line control becomes very important. It determines the ability to move it from one cycle phase to another. So now as we move in here, I'll come back into these settings. I'll move them back down to 5%. And now we'll start to get some other belt line areas. So I'm going to do these as boxes because this is going to be fairly important to understand. So we have this sandwiching pattern right here. We're going to try to average the midpoint of these levels going across this range, including this downward cycle 1 year. And I'm going to say that we have a midpoint channel area roughly right in here. So this would be considered a midpoint channel. Let me go ahead and make it a bright color. And then we have another midpoint channel roughly, if we figure this area, wave, 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 followed back up. I'm going to midpoint channel this kind of right in here. And then you can see we have a number of waves back over here. A lot of crisscrossing back over here. We have, let's call it a midpoint channel kind of down in this area. And then we have a bit of a minor little midpoint channel kind of right in this area. This is a little lower, may not come into play. Okay, so what we've done now is we've mirrored and mapped all of these price channels, which will play an important role for where we're at. So now remember that level that I drew down here around 24,500, this area, this red area here. So understand that that is just below this midpoint channel, comes right off of these highs, very, very close to control of the market. So this indicates that we're having losing control of the market. Again, this is losing control of bullish trending here across this dash line. We got above it, we had brief control, bullish trending, and we rolled back below it. This indicates a failure of maintaining control. Now we're coming back down into this bearish area. We are still bearish. Let me spread this out. We are still bearish. We are expecting it to continue to trend downward. Understand that we are not likely to find any real support until we get below this area, possibly down into this area, this 23,500 area, which is where we're going to find this immediate belt line area. Okay, and this belt line area is aligning with this level that I drew here, which looks like it may have come from last week's analysis. So what I'm doing here is showing you again, Fibonacci Price Theory, we're seeing a series of lower lows, lower highs. We had this breakdown last week. We're in this sideways channeling. The real reality here, ladies and gentlemen, is that Bitcoin is likely going to continue to move lower, likely going to try to move to this 24,500 area, breaking this low to the downside because it's failing to get back above this belt line area here. You can see this area here is moving right through this belt line area. So we not only did we move above this belt line area here, this green channel, which was bullish, we then failed, moved back down, failed around this middle channel, this blue middle channel here, and now we're in this move downward, trying to move down to this middle channel. And this middle channel puts us right here, this one right here. This puts us right into this middle channel range that I drew, where I believe we're going to likely find some support. And this will likely flag out. Like I've shown you here, this is the flagging formation. I'll make this deeper red. Deeper red. This is the flag setting up where we come down through price, reach this 24,500, 600 area, which is really a range. So call it 24,500 to 24,700 or 800. Then we're going to get a nice little bounce. This little bounce here is likely going to be a 10% bounce, a $2,000 bounce. Then we're going to flag back out, likely, again, this is just likely, flag back out and move into this washout low. And this washout low, again, is very similar to what we saw right here. So you can see we came down, we established a base, we rallied back up, we flagged out, got our washout rally, came back down, flagged back down to these lows, set up a base, rallied back up, and attempted to make a move. It's the same setup here, guys. It's a washout, double confirmation of a low right over here, and this will set up a new wave structure that will give us the opportunity to try to move forward. Now, we will still be in the midst of this broader wave formation. So again, you still have this broader wave formation, and this is really a flagging formation that is likely going to persist in restructuring price. So understand that if we establish this double low, we come back up off of this, we're still potentially in this flagging formation, meaning that underlying the market, we're not going to have a whole lot of opportunity until we move out here into 2025. So what's likely going to take place here is that we are going to have a, and I will try to draw it, some sort of a basing structure across this area, which may end up being our flag. So this could be our flag in the sense that once we establish this low, we've got these double lows, we stay away from this low criteria. This would be our lower channel range. This middle area support level here would have to hold. We would then rally back up off of this flag, potentially maybe roll around a little, come back up off of here, run back down here, run back up over here, and then attempt to move up. We would have an A, B, C, D, E type of formation, which would be our primary trending cycle to give us this move. We would have a higher series of higher lows moving through this channel, maybe an upward sloping lower channel, and ideally this would consolidate very well with my unraveling expectations of global assets. So once we get to that point, we are going to maybe see oops, drawing lines everywhere. And this again was from last week, so bear with me here. So this gives you a better definition of consolidation. Ultimately, we still have these lower channels to worry about, these lower price channels. We could still see a move down to 12,000, maybe 13,000 right over in here, ultimately. But right now, this ultimate low, which looks like this should have been here as an ultimate low, acts as critical support. As long as we stay away from this ultimate low and continue to channel like this, which I believe is very, very likely. Remember, these become critical belt line areas, and I don't know how to say them any more importantly than this middle channel area, this red dash line and green dash line down here, become very, very important to understanding why this base becomes critical. It becomes critical because this is historically where control of the market is going to be dictated. This then becomes the upper target area. And again, why is this critical? Because we have confluence across multiple belt line areas, calling this a critical area for us to watch. So we have these setups. Now we have these little intermediate setups here. This one's already been reached, rotated through, and failed. This one's we're coming down to this area right now. And once we get into this area, we'll likely see it move back down into this area and try to hold up. That's where I believe we're going to see the base, see the support. We may see an upward channel moving through here. We may not. We may see just a downward flag formation, eventually apexing over here. So ideally, if my drawing is correct, we're looking at an September-October 2024 base bottom for the next big move in Bitcoin. Okay, now let's take a look over here at one of my custom indexes. So here we have Bitcoin. Here we have the channeling cycle. It looks like I had drawn something, basically the range that we went into here. And this is Bitcoin that I'd drawn last week. Get rid of this. Oh, yes, yes, yes. This is the rotation of the 50 area. So very important to understand where we're at with this downward cycle, moving from the failed 50 area that I just highlighted on the other chart, potentially back down into this lower 2022 area. And that's again moving back down into this area. So we've got a lot of confluence here with this failed move, failing to hold above this level, that we're going to unwind even further. Now these areas here represent a flagging formation off of these lows. These areas here, if we come across where we're at, 23,400 roughly, 23,000 let's call it. So somewhere between 23,000, 23,400, and if I come back over here, we're looking at potentially 20,000. This mid area here is 23,000, roughly 23,000 right there. So again, where we're at with the midline channel, where we're at with this channel right here, try to make this a little darker because it's very important. When we get alignment of longer term support, so understand that what we're doing here is that we are looking at the measurement of how this steps through these levels, how it's failed here. This is essentially rejection, essentially wanting to move back downward. So I drew this not knowing really where to go, but obviously potentially moving down to the 20 area. But again, this is a measurement of price. So you can see here that this move from here down to here was actually a move from back over here down to over to here. So this was a big move. Okay, so this move from this green area to this blue area equated to a massive, let's figure it out, equated to a massive green area right there. 20,000 point move, $20,000 move. Whereas where I'm thinking we're going to be end up from here to here, if we move down to this area, which is indicating support, we're talking about a $7,500 move. And that would equate to the same potential move downward. We would be looking for support down above this area in 20, 22, 23 to be able to set up, and particularly right off of this level here, which is very interesting to me as a support level going across this level. As we moved down here, we got below it, we had bearish control, we rallied back up, that bearish control was rejected, and it continues to move away from that level after rejection. Bears grab control of the midpoint area, they grab control of the market, but they're failing. So understand that this level here becomes very critical for upward support, which means that we would likely see something more along the lines of this move here, possibly retracting to this type of move here, showing up with a support level around 23,700, 23,600, maybe a little deeper, maybe a little more aggressive, maybe failing multiple times above this before coming up. So we can ignore for now. Yeah, I didn't want that. Okay, how do I get rid of this object tree? Well, let me just drag it out of the way. Okay, very clean. Way to go, Brad. Trying to help everybody out. And so we're going to see this move, and then we are going to see kind of that move, or maybe a couple of deeper rotations back out of it, and then we will get rid of this. And this becomes a more efficient pattern. It lines right up with our 23,000 area, okay, which is perfect. We now have a confluence of alignment across this area, which aligns very well with our triggering mechanism back off the other chart, and would coincide with the downward cycle back over here. So understand that we need to see this type of a move Yep, okay, very good. You see how my moves kind of aligned with Fibonacci price structure? I see the markets in Fibonacci structure, and we are already talking about very clear Fibonacci structure. So ideally, ladies and gentlemen, you're going to get some rotation. You're going to have potentially $2,000 or $3,000 rotation through this move, maybe a $4,000 or $5,000 move here to the downside. But ultimately, you're looking for primary support to line up right around 23,150 to 23,250. And you are then looking for secondary support to line up around 20,000. Let me draw a couple of sidelines here. So you are lining up here as primary support. Very, very important. You are lining up here as secondary support right across here. And then you have intermediate support, believe it or not, right below this level. So we could get down below that range, and we could end up finding some very moderate support down in this lower area. If we get below this 22,000 area, then almost guaranteed it's going to come back down and attempt to retest this low. That's what Fibonacci Price Theory says. There is no ultimate, no critical low in this area. So understand that we have this low, which is our current critical low. We have an intermediate low back over here, which lines up very, very well with these lows moving forward. And then we have no other low except for right here. So understand that the downward cycle trend that is projected to continue, in my opinion, until we see price try to move in a different direction, and understanding that the unwinding of this cycle phase is likely going to move us through these levels. That means that price must attempt to establish new lows. Almost got there last week, but understand that it must take out this low, targeting this low, then attempt to take out this low, targeting this low back over here. And ultimately, if it fails to take out this low and double bottoms, then we will see some support. Or if it fails to take out this low, then we will double bottom over in this area, like this one. Let me change this color. So we have, this would be failure to take out this low, which means it is changing direction, going back up to take out highs. If it takes out that low, then it's going to come down here to this lower range, which essentially aligns to the belt line. So the belt line area, think of the belt line area as the control factor for price, and think of the highs and the lows as the target. So obviously, two sumo wrestlers in a battle. The goal is to get somebody out of the arena or the ring, right? In order to do that, you're going to use every measure possible. The goal is to take out the highs and the lows. That's what price is trying to do. It's trying to break highs and lows at all times, previous highs and lows, and or set new highs and lows. But in order to do that, it's got to gain some momentum, some leverage over the opponent, meaning it's got to take control of those belt line areas. So that's why these belt line areas become very critical moving forward. So we've lost this belt line. The bears are now in control. They will drive it down to this area, try to regain momentum. We may see a bit of a struggle around this area, giving us this little bump to the upside. Then maybe move back downward into the 23,000 area, where we might find our first new support level based on our resistance and our structures, our belt line structures. And then ultimately we do come down into this 21,000 area, which we have multiple belt lines and extreme lows back over here. This tells us that this is a big battle. This is kind of like a flyby battle. It's important to understand that it's likely going to be here, but this one and this one is kind of like a flyby battle. It could turn into something bigger. It could turn into the battle that won the war, so to say. But ultimately, we have very big battle for control here, and we have a fairly big battle for control back up over here. We're in this downward cycle trend, which means we're likely to roll like this over the next couple of weeks. We'll see how it plays out. But ultimately, I think this is really the target, coming back down and double bottoming off of this area. But secondary support could be here or here, meaning that we could find a base up in this area, and this would be very solid. These higher lows, understand that ultimate low here, critical low here, or let's call it intermediate low here, potential new intermediate low over here. These are higher lows and higher highs. This is telling us that we're in an uptrend. Currently, we know, and this is weekly, we're in a downtrend because we've already established that based on the other analysis I did last week. And remember, watch the video last week if you missed it. But long and short of it, we're in a downtrend. This is where we're likely to try to find support. Secondary, intermediate support, primary support's way down here. And ultimately, I see it flagging out over the next 12 months. You're going to see some good moves. You're just not going to see anything super explosive. Okay? Now, one of the members asked me to cover this Ethereum Bitcoin. I thought that I would do this, in 34 minutes already. Okay, so what we're going to do, ladies and gentlemen, is we are going to just take it from scratch, okay? I'm going to go and I am going to do my analysis from scratch. This is the entire chart. This is weekly, and we are going to start looking for extreme highs and lows. You can obviously see this is an extreme high, and you can obviously see this is an extreme low. I'm not going to worry about that super low. I'm going to grab this low here. So these are our ultimate highs and lows. Okay, this really becomes the working from the outside in. Okay, now you can see this big rotation here. This plays a role, but this didn't form into a double bottom. We broke through it and we were rejected. This close to a double bottom. Let me clone this. And I will tell you that double bottoms on weekly charts can be prices close to one another. So I will indicate this as a double bottom. This becomes our new ultimate low. This becomes our secondary ultimate low. Now we have some unique lows here. Unique lows are lows that exist where there is no price low that threatens it for at least 10 to 15 bars on a weekly chart. Actually could be up to 20, 25. We have a unique low over here. So I am going to move and clone this up to here. And I am going to clone this down to here. Each of these are being unique lows. Now these are unique highs because we didn't have a bar that threatened it, a high price that threatened this threshold for 20 to 25 bars. This is a unique high. This is a unique high. This is a unique high. Now, obviously, this got breached. This got breached. This got breached. This is the current unique high. That's the one that has not been breached. So, clone here. Drag this down. Place this right here. This is another unique high that has not been breached. Clone this. Bring this down here. So now, I want to point out here that we have a unique low here that has not been breached. So I'm going to grab this, clone it. And again, I can go deeper, deeper, deeper. I can go all the way down to 1 minute with this and explain to you what's going to happen going forward. Okay, so now we've established that we are in this tightening range. We have these lower lows as support thresholds, potential downside targets. We have these upper highs as upper targets. Theoretically, ladies and gentlemen, the way Fibonacci price structure works, any one of these previous highs and lows become valid targets. Just because we got through it and got rejected, same thing here, doesn't mean that it becomes invalid. This is still a target level because it's a unique high. Same thing down here. This becomes a target level. In fact, I will do these. That is the way Fibonacci price theory works. They become targets because price has established them as critical price junctures. In fact, this one may be, oh, so darn close. I'm going to leave it there anyway, calling that a double top. Okay, so now we have kind of mapped out our future. So where was the last, let me spread this out. Where was the last price breach? Where was it that we had an ultimate price high or price low breach? The last ultimate breach was right here. Now let's look here if we have any ultimates. We have a couple of little, and again, these are ultimates and these are what are called intermediate, okay, or I call them sometimes critical because they determine trend. So did we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10? Yeah, this was technically a critical low, and we broke through it here. So this would be bearish. Let me try to, where are they? Here, I think. Here. So this would be a bearish trigger right here. And because this would be our next trigger, this would be a bullish trigger. So let me get a bullish trigger in here. And so this would come across here. This would be bullish. And again, this is weekly, so you're going to get this kind of rotation weekly, okay? Daily, we would have actually, because here's a little high here, this would have confirmed here, bullish. And then we come up here, we establish this low, we establish this high, we stay into it, this low gets broken. We are essentially bearish right there. We establish this low, it's not broken. Establish this high, it's not broken. Establish this low, it's not broken. Establish this high, it's not broken, it didn't clear. Establish this low, it's not broken. Establish a potential new high here, failed, was rejected, came back down, broke this low right here. This reconfirms our bearish trending. Oh, I do that all the time. Come here. There we go. This reconfirms our bearish trending right here. Establish a new intermediate low, didn't get breached. Establish a little intermediate high, didn't get breached. Established a new intermediate low, didn't get breached. This next big bar reconfirms our bearish trending. Right there. Establish a new low, didn't get breached. We have no high. This is our last high right here. Established a new high, didn't get breached. Established a new low, didn't get breached. And we have, oh boy, we might have something here. Let me drag, see if I can drag this out. Okay, price. What is the high here? 6772. What is the high here? 6787. What is the high here? 678. Okay. Very short term, we have a little critical high right here. This one just barely got above it. See the high price there? 6785. It's higher than this one, 6772. And again, this one came down, 6780, and this one came down, 6764. This move right here, this little guy right here, right there, moved us into intermediate bullish trending. Okay, so I'm going to highlight him, a little bit different color. I'm going to clone him and try to, with the best ability, double mark this, because I want you to be aware that we have very serious support and resistance right in these areas. I believe this is supposed to be right up here as well. So you need to understand that this little intermediate reversal of trend on this weekly chart for ETHBTC is indicating that you have some upward trending. But I'm going to just warn you that the downward trending is indicating we've had numerous concessions to the downside. We have had numerous confirmations to the downside. You have to watch these levels. They will become very critical. Here, 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 and obviously this one right here is going to become very critical for you to the downside with this upward trending. You have this confirmed trigger. We have a little Fibonacci Price Theory price breach right here. This is really counter trending. You've seen these bearish triggers coming all the way down, establishing these new lows. This is counter trending. It's going to likely run into resistance here and here. You have a little bit of an upward move. It's not much, 2 or 3 tenths of a penny. But in reality, you are in a downward trend. And again, this is a weekly chart. You are counter to a downward trend. So remember, price is always attempting to reach new highs and new lows. So at this point, it's failed to reach below this low, so this is rejection, okay? And we're trying to move back up here to see if we can take out this high or establish a new high, which we did. We set up a little intermediate critical high right here, which got us into this bullish trending. Right now, it's going to have to try to get up to this level, then this level, then this level, then this level. Any one of them can fail and be rejected. Because of this very strong resistance up here, more than likely it's going to follow Bitcoin and roll downward. It's going to have base here. It's going to roll up, find some rejection here, roll back downward, break through this level, and then attempt to flag out back over in this area, kind of like I was saying with Bitcoin. So I do not see there being a whole lot of real potential here. This is basically a reversion, upward reversion in a downward price channel. Now you could also, I mean, for pardon my language, poops and giggles here, you could potentially try to follow trend channels off of these highs, or potentially off of, let's call open to high, open and close ranges, kind of in this area, and you can see that we're very close to kind of a downward channel here where rejection could be almost immediate. So be aware that you've got this downward channel coming off of these highs, off of this opening price level, off of these highs, coming across here, and you're very close to rejection. So it doesn't really make a lot of sense to try to trade this move knowing that we're in a downtrend. What makes sense is to wait for price to move either outside of this area here or outside of this area here on a strong confirmation to be able to establish a new trend. It's essentially a wide-ranging price consolidation. We are flagging. We are in this downward cycle trend. We're getting narrower new price highs. We're getting narrower new price lows. We are entering into this real consolidation phase. We've got a little bitty high right here that just got broken. I would tell you that we have a chance maybe up here, but it's not big enough for me to even be concerned. I would be more concerned about upward trending here, getting above this level and or this level. It would become more confirmation to the upside. But in reality, like I said, these bigger, broader downturns, until we get a real confirmation of a solid uptrend, it is this predominant downward trending that is really driving the market. And I would say that this trend line here becomes very important, because it's either going to break this trend line and attempt to rally upward, or stay below this trend line, attempt to come back down, like I was saying. So be aware that we've got a very solid downward channel, and I would think that we could stay within this downward channel for quite a while, coming back down into this area, trying to set up some sort of a base, a double bottom again, just like I was expecting. Remember, there will be some impetus in these markets as capital shifts around trying to find opportunity, but right now I see it as a broader unwinding still taking place, and I don't see the real big opportunity coming until August, September, October of this year, which, remember, puts us into this area right over in here, maybe, or early 2024, where I think we could see some real movement, some real speculation movement. In the meantime, like I said, this is very dangerous, and again, this thing moves in very tiny little pennies, it looks like. So be aware that we are consolidating, and we are likely going to come back down and try to find this double bottom right down here, 49 cents or 4.9 cents. It makes sense to me that we're likely going to come back down here and try to find this double bottom. Okay, guys, I hope that helps. And if you like it, share my research, let people know what I'm doing. And remember, I am not 100% accurate in reading the future. I give you my best inputs. I try to tell you what to expect and how the markets work. I am all about price action and technical analysis. I don't really buy into fluff. Price tells us everything we need to know, in my opinion, and gives us the opportunities to learn where the opportunity for profits exist. So again, hope you're enjoying this. We'll talk soon.